This is Devin Baker. I've been Devin for 3 or 4 years now. And I'm super excited about what he's going to talk about today because he's been educating me on blockchain tech and crypto. And in fact, this book, many of you may have picked up. I'll probably talk about that in a minute. I just finished it. It's fantastic. It does a great job of like helping people like myself that don't understand this technology make it simple. Some background on Devin. He's got a background in private equity. Worked for El Catterton. You may have heard of El Catterton out of New York. And then also worked with a startup that was spun out of El Catterton. So has private equity and startup experience. And about 1.5 years ago, became fascinated with this whole new technology called blockchain, which many would argue it could be as transformative to our culture and our societies as AI and robotics. And so that was kind of you'll see the ties here in a minute, and that's why we purposely designed these presentations together. So our investors as a group, we get smarter on these technologies. So I'm super excited about Devin being here. He knows a ton about this. So please be interactive with him, ask him questions. There's a lot of information here, but hopefully you walk out of here with a good understanding of how this stuff works. It's pretty exciting. So Devin, it's all yours. Thanks for coming.
Thank you.
All the way from New York, by the way.
Yeah.
New York. Yeah.
Well, thank you guys for having me. Like Kevin said, my name is Devin Baker. I currently run a long-term oriented liquid crypto hedge fund. So my goal here is twofold. First of all, it is an honor to be here, so thank you for having me. And my goal is twofold. The first is to try to demystify a bit of this crypto thing for you guys. I want you to think of me like your partner, like a research analyst. And second, I want this to be a conversation like Kevin said. I'm not here to give a presentation. I'm here to have a conversation and connect with you all and go wherever we want to take this conversation. Now, we could spend the whole hour talking about the intersection between robotics, AI, and crypto, but let's just start with crypto and we can see where it goes. But they will intersect, I believe, so we could have a really interesting conversation about all that. So first of all, who here would say that you're familiar with crypto? Raise a hand. Okay, that's pretty good. All right, and who here owns some crypto themselves? All right, I like it. And who would say that you have no idea what the hell crypto is and we're just trying to figure it all out? All right, cool. Well then, I'm your guy. Yeah. No, that's great. That's great. Where should I be pointing this, by the way?
You have to click the screen with the slides on it.
There we go. So first, let's talk about a little bit about what innovation actually looks like. We tend to think it looks like this: black turtlenecks, rockets, utopias, smart, intelligent AI and robotics. But the reality is that innovation actually starts looking like this at the beginning. So believe it or not, this is the beginning of the internet. There were actual humans laying actual cables underground and underwater to pass electricity and light signals back and forth. Early websites looked like this, and early tech founders looked like this. So I start here because it really is important to have that perspective to remember what technology and innovation looks like in the early days, because it's easy to forget what it does feel like. So what if I told you that crypto today is like the internet in 2000? And that is actually the truth. So if you map the adoption curves of crypto and the internet together, we're approaching 1 billion crypto addresses, which puts you right around the year 2000, where you had right around 1 billion internet IP addresses. So I like to frame it like that, because sometimes we think crypto is this early nascent thing, and it is to some degree, but like it's actually moving way faster than the internet was at its time. So I'm not ashamed to admit that I started like a luddite when it comes to this crypto thing. And I'm not ashamed to say that, is because we all have to start as luddites when it comes to technology, especially the world-changing ones. We have to learn. We start from the ground up. So I want to share a little bit about my journey from luddite to hopefully a little bit less of a luddite today. Can you click back? Yeah, thank you. So let's go back in time. It's January 2021. Bitcoin is rocketing. It goes from $10,000 to $40,000 in just a couple weeks. And remember, this is the COVID days, so I'm sitting in my bedroom/office looking at what this thing is, and I start to get curious, and I say, what is this? I need to take a look. And it turns out they call it the rabbit hole for a reason. I became obsessed. I couldn't get enough. I'm still obsessed. I still can't get enough. But in the end, I became convinced that this is a once-in-a-generation opportunity, and I just didn't want to miss it. So what did I see? I saw three things. I saw an opportunity at a really interesting time with really unique access. So my analog, I think crypto is our generation's internet wave. It's a new platform that's going to change the world. And we're still early. It's like being in 2000 and getting a stab at this internet wave all over again. And unique to crypto, too, is the level of access you can get. You all are well familiar with such a big part of the craft of angel and seed investing is actually getting and earning access to deals. And what's unique to crypto, and we'll touch on it in a little bit, is how it's accessible to anybody, anywhere, anytime. And especially over the last couple weeks and months, there's a lot of things that are pretty straightforward to me that I think are really interesting about crypto, but there was something beneath all of that that really drove my obsession, and I've spent a lot of time thinking about that over the last couple months. What is it that really captures me about crypto? Why do I love it so much? And I came up with this. It's that crypto invites us to rethink how the world works. It asks us questions that seem simple but are actually quite profound, like what is money? What is ownership? Value? Can they be digital? Do our systems function as well as we think they do? So why am I here? I'm here because I believe in the value of the tech and the innovations that crypto brings and how they can shape our world and the world of technology and culture. Crypto has really just poured fuel on the fire in my belief in the value of the frontier and of going to the frontier and of pushing it forward. So Comma is my version of my adventure to the frontier. And it's an invitation to you to join the adventure. So let's get into the meat and potatoes. Why does crypto matter? What's interesting about it? I'm going to go through three things. The first is some frameworks for how to think about crypto. The second is what is new about crypto that the internet and older tech can't do. And then third, what does that mean for the future? So first, I'll offer that, to me still, one of the best ways to think about the crypto space is there's Bitcoin and then there's everything else. So when I say the word crypto, most people think of the word cryptocurrency. And when they think of cryptocurrency, they think of Bitcoin. So while it's not exactly wrong to call Bitcoin a currency, I think it's more right to think of it like digital gold. It's more of a store of value and something we'll invest in than it is something that we'll buy our cup of coffee with in the morning. So if that's Bitcoin, what about everything else? You know, there are thousands and thousands of crypto assets. What's the deal with all of these? And for that, I think it's important to, again, zoom out and look at the evolution of the internet. So when the internet first was invented, the thing that it really did was revolutionized our access to information. Then we come to the 2010s, you have the mobile era. What does that do? In addition to simply reading all this information that's now widely available, we can also write to it. We're familiar with the social media platforms that enable us to seamlessly put our own fingerprint on the world and on the internet seamlessly. Who is this guy? He's pretty famous. His name's Milton Friedman. He is a Nobel Prize winning economist, and he had this to say on the internet in 1999. He said, the one thing that's missing is eCash. And now, why did he say that? Think about your use of the internet today. It does most everything you need it to do, but still, even in 2025, when you want to transact or do anything financial on the internet, what does it do? It punts you into some other system, whether it's a credit card network, payment processor, bank flow. I mean, even legal work streams have to happen separately. And it's incredibly prescient because to me, he's describing crypto. So that brings us to Web 3. So where Web 1 and Web 2 fall flat, this idea of economic value and ownership is separate from this technology and this system and network. What crypto does, we call it Web 3 sometimes, it integrates that concept, this idea of ownership, of value, into the actual network of bits and information. So when I think of everything else, I think of it like a decentralized app store, and then the apps that are built on top. So let's think about the Apple iPhone, right? New product, it brings us a new platform and an app store that we can build on. But fundamentally, if you want access to the apps and the decentralized app store, you have to do it, you have to duct tape it together, right? Apple has access to the platform, and then the apps built on top are completely separate. Another way to think about it is crypto is a new internet plus the products and services built on top. So again, let's think about the internet. The internet itself, you can't own. You can't have access to the internet. The internet is a protocol called TCP/IP. It's computer code. It runs, but you can't own it. So if you wanted to have any exposure to the internet, you had to find these imperfect proxies. Initially, it was the telecom companies that were laying that wire underground and underwater. And then eventually, right, you have things, Facebook, Google, all these companies that are built on top of the internet. So crypto does that all in one. Imagine it's 2000, and not only can you invest in these amazing companies that we know today, but you can also own a part of the internet itself and a part of all the value that it creates. So that simple protocol, TCP/IP, has generated hundreds of trillions of dollars over the last 40 years, right? And you can't own it. That's just it's leaked out inefficiently to all these other companies. With crypto, you can own both. Bitcoin, some other assets like Ethereum, Solana, just to touch on a few, actually they are the underlying protocol, and because they layer in this concept of value and ownership, you can share in the value that they create in this platform. So what does crypto do that the internet can't? First, like I said, it layers in ownership to the network itself. So what that means practically is that users become the owners of the network. Imagine if, as an Instagram user, by virtue of using the platform, you then ended up owning a part of the project. Right? Today, that's not what happens. And as a result, you get all these negative externalities. These companies have essentially total control. I mean, they take anywhere from 100% to 90% of all the economics that flow through the platform, which is, when you think about it, it's kind of egregious because we call them user-generated content platforms for a reason. So much of the value of these companies is because of the users and the content they generate, and yet they share in essentially zero or pennies on the dollar of all the value that they help create. And it also reshapes governance. So by turning the users of these platforms into the owners of it, you give them back power to be able to determine what direction the platform should be taking. So again, it's this really simple concept, but it's super profound. Those that create the value receive the value. Again, today, in order to coordinate all the value that gets created, it happens on a layer removed from the human underneath, right? To date, humans are generating the value using code and other tools to generate leverage. But all we've had today are legal entities that we call companies or limited liability corporations because it's simpler and straightforward to orchestrate value. Now, what crypto does is it eliminates and drastically reduces this friction. It enables you to move that nexus of coordination down a layer to the person. And so that reduces friction and it generates a ton more value. And another interesting side effect of all this is that it eliminates the concept of marketing in the traditional sense. When we think of marketing today, we think of throwing a bunch of money out into the ether and you hope that some strangers come to use your product or service. But when you create a system where the users of the product, of the platform become its owners, you have a built-in marketing force because they're aligned with the entire ecosystem. They want all the value that you do as a platform. So you have the best marketing force in the world. You have people that own the thing. Second, crypto is decentralized and programmable. And really what that means is it's a system that's run by code, not just companies and humans who are inefficient. So what that does is it creates more frictionless and free systems. You get systems that operate essentially free and essentially instantly. And as a result, it's also anti-fragile because there's no single point of failure. There's no single server farm located in Iowa somewhere that holds all the data of this company. It's distributed everywhere. And then third, I will note, crypto has a massive problem with really big, long, complicated buzzwords. So I'll say them and then I'll translate them. Permissionless interoperability and composability. And what I mean by that is, in short, crypto is open source. Anyone, anywhere can build anything on top of anything else. And as a result, what that does is it makes for a more meritocratic system. It takes the governor off innovation, and it makes a world that's more positive sum and exponential. So how about the future? In the early 2000s, it was near impossible to imagine what we'd have 20 years later. Early days, we had restaurants that were putting their menus online. We had newspapers that were putting their Sunday edition up on their website. And it would have been near impossible to predict Uber, Netflix, Instagram, TikTok, ChatGPT. And I think the same thing is true of crypto. Today, we have Bitcoin, digital gold, we have NFTs, digital art, we have stablecoins, we have markets that run 24/7, 365. And I think it's really, really difficult to say where it's going to go. But I'll venture a guess here. At its core, crypto really is, it's coordination technology. It's coordination and freedom technology. It enables humans to do what humans do best, which is tell stories and coordinate capital, both human and financial, in a direction, and then make progress towards that goal. So really anything that we do today, any of our systems where we are doing that function, we're coordinating people, we're coordinating money, we're coordinating energy, we're coordinating machines and robots. You can think of a future world where crypto creates these new opportunities to do that coordination. Everything from how you earn money as an individual to how we organize as a nation. So why does it matter to you all? Investors on your own right, angel and otherwise. So the first thing we've been talking about this whole time, a bunch of new opportunities. Chris touched on it. New platforms make for new opportunities. Again, see above, see this entire conversation. And how that often manifests itself first is through infrastructure. So this guy, a little bit less famous than the guy I showed you before, but maybe not for long. This guy says, buying Bitcoin is like buying gold, but in 1000 BC. His name is Dan Morehead. He's legendary because he's the founder of Pantera, which is one of the earliest and biggest crypto funds in the space. And he wrote this legendary email, very timely. We should buy Bitcoin now at $65. And let's see how that turned out for him. Pretty darn well. As of November, the fund itself crossed the 1000x mark, or net of fees and expenses, a return of 131,000% over its lifetime. And he says, it's equally as compelling today as it was then. And this is just referring, this fund is solely in Bitcoin, and that to me is the analogy for the infrastructure phase. We've been in this infrastructure phase. It's been interesting. It's going to continue to be interesting. But some of you may be familiar with this chart. This is a chart of how technological innovations move through society. So we start in a period called the installation period. Infrastructure gets built. We pass the returning point, which I think we're here in crypto. And then you get to the deployment period, where you get the benefits of all this upfront work, building all this infrastructure out. So the other way to invest in this new technology, in addition to infrastructure, and I think the more interesting one over the coming decades, are the applications, the application layer, the things that get built on top of this technology. This is a tweet from a new friend of mine. His name is Josh Cornelius. He's the co-founder of Seed Club, which is a consumer crypto accelerator, incubator, and early stage investor. And I just love the way he kind of opens the aperture in a way to think about crypto that I find so fascinating. So core to crypto is the token. I keep mentioning that we are democratizing and improving the systems through which we coordinate energy, people, money, otherwise. Tokens are the tool by which we do that. And he says tokens are exploding the surface area of what can be valuable, which is upstream of what's investable, which is upstream of what gets built. And I think that's just so brilliant, because when you create a space and you open opportunities for people to paint a vision, and then people like you fund that vision, you create a future. And then the third reason why it matters so much for you guys is it reshapes how we think about liquidity in investing. So first, again, I've mentioned new and more opportunities. and it reshapes how we exit our investments. A couple of years ago, you were talking about 5 to 10 year investment life cycles, and I'd be curious to get your all take later. Like, it seems like that 5 to 10 years has really turned into more like 10 to 15 years or longer, right? Huge problem. And crypto changes that. With tokens, these projects have much lower or no lockup to early stage investment, even when done at the seed and angel stage. Why? Because these token issuances, these events where you take this project and you unleash this system via a token through which you can start to coordinate these things I keep mentioning, they trade 24/7, 365. They're fully liquid, and they go, you don't have to wait for an IPO or hope for some exit or find some broker to sell your shares in a secondary market to somebody else. It's much faster. And then this, to me, is one of the most interesting points, and it's a big reason why I started Comma Partners as a liquid crypto fund. It's because when you think about what crypto does, it gives you an opportunity that it's unavailable in other traditional asset classes. So if you think about a fully liquid portfolio, but not just in the way that you'd think about a public markets hedge fund today, you can actually build a fully liquid portfolio across stages, all the way to pre-seed idea stage projects and companies, to late stage public company equivalent projects themselves. You can own them all, fully liquid. So not just across stages, across categories, and then you can risk manage the thing. So it's fully liquid, so you have the really simple idea, which is, okay, I can change how much of each I own. How risk on am I? How risk off am I? Which categories do I want to be exposed to or not exposed to at any moment? But the other interesting thing is you can hedge the portfolio. There's a market for derivatives, which exists and is going to be only more increasingly robust, where you can buy things like options and futures to hedge the portfolio itself. And lastly, it's complementary to your traditional holdings. In my opinion, crypto plays a really strong role in a portfolio when you zoom out. There's essentially zero exposure to crypto in public markets today, very little in VC unless you happen to be invested in a crypto-specific VC fund. And to build on that, there's this imbalance in the capital in the space. Today, in the private crypto markets, there's about $60 billion of capital, and in the liquid crypto space, there's about $10 billion. And so any imbalance like that creates an opportunity. So where are we now? Like I said, I think we're here. I think we're at this turning point where adoption continues to grow and the space changes. It looks different in the future. Another way to put it is, I think we're in this moment where we're changing from a linear age to an exponential age. You know, from assembly lines to infinite leverage, infinite labor, infinite intelligence. And we've seen that. This is a chart of Moore's law, which basically says that our computers get twice as good every 2 years. It's amazing. It's interesting. The really cool thing about crypto, though, is not only does it benefit from Moore's law, because at the base level, crypto has to run on computers. It does have to run on hardware. But crypto is also a network. And what that means is it's governed by something called Metcalfe's law, which is essentially Moore's law squared. So if you think about crypto, it has these two incredible tailwinds, the power of technology and the power of networks together. I think we're here. We're in this stage of crypto. I mean, come on. And where are we going? I've beat this analogy to death, but it's how I think about things, and it really painted such an attractive opportunity for me when I got this. Imagine it's 2000. You're hearing about this new thing. It's called the internet. There are these weird things called .coms. You don't understand why a website helps, but it's called a .com. And imagine that 25 years later, the entire economy depends on this new technology. More than half of the $50 trillion S&P 500 would be considered .coms. And this technology is responsible for hundreds of trillions of dollars of total value. Crypto is the fastest growing asset class in history. From its start at zero in 2009, when Bitcoin was invented, to about $3 trillion today. So look, it's impossible to give a number, but over the coming decades, I think we go to something like $50 to $100 trillion. And why is that? It's because I can't think of one single example of an innovation where you take a system, you improve it, you make it more efficient, you decrease friction, you use technology, and it doesn't end up an order of magnitude bigger than the one that came before it. To me, it's simple. Is the future going to be more digital or less? I think we're going here. We're going to get this utopia that we think of. So let's talk about it.
So right now we have binary coding. Do you think to advance crypto we need to go to like quantum, where it's enabled to do so much faster calculation, less energy? I mean, is that the next step, that it has to blend with quantum calculations?
It's a great question. I don't think it has to. I think if and when you're seeing all these announcements out of Google, it seems like we're closer than we thought we were, although maybe not as close as a lot of people think after seeing the news. I don't think it's not necessary, right? We look at the pace of innovation. Again, look at those charts, Moore's law, Metcalfe's law. We've seen the change we've had in binary computing to date. I think we're just fine. And we can't even see around the corners, right? Maybe it's quantum computing. Maybe it's some other innovation completely, which alters this path of crypto and the rest of the world for that matter, right? So I don't really know. I can just say I believe to the extent we can increase our leverage, which is essentially what compute does, right? It makes humans able to accomplish more. It's going to benefit all innovation, especially digital innovation.
I've heard people applying AI into the crypto space and getting enhanced results. How do you see AI fitting in? Where might it come up?
Yeah, this is how much time you got. This is so fascinating to me. So I'll pose a couple questions. The first is, in a world where there are 7 or 8 billion people in the world today, in a world where there are billions or tens of billions of AI agents, whether it's just software online and or robots or some combination of the two, what does an economy look like? I mean, Chris, we had this conversation a little bit earlier. He who owns all the robots owns all the production. I was just talking with Kevin and Kathy just before this. One way to think about human history is there's been this tug of war between labor and capital. And sort of what Chris was alluding to is labor is first of all, it's already been changing, right? I think it's important to zoom out and take a look at, he already said, 75 years ago, our jobs would make no sense, right? And so if you just think about how that's going to continue to accelerate, labor maybe doesn't go away, but to be provocative, let's say labor goes away completely. You have a world of capital, and what does that mean? So we're going to have to rethink how these systems work. But again, what's interesting about crypto is it opens the surface area for how you can contribute and attribute value frictionlessly in a world that's increasingly noisy, increasingly chaotic. So the other way to think about it is, what money are robots going to use and AI agents? Are they going to use the US dollar? Are they going to use the euro? Are they going to use the pound? Why would an AI agent, a robot, use some money that we humans created and manipulate all the time? And no, they're probably going to use a digital money, zeros and ones, right? You could argue that crypto was actually invented for robots and AI. I mean, we're just now making it more human readable because we have an AI layer over top of it. So I think crypto will be the value infrastructure by which AI and robots transact. Because there are limits to where our systems today get to in terms of throughput and value and all these sorts of things. Yeah?
AI could be the interface then?
So that's something I've been thinking a lot about recently. One interesting way to think about it, one possibility, is that the AI agent becomes sort of comparable to the website, right? The internet's this world that until the website was created, what do you even do with it? How do you interface with it? What does it mean? And any level of friction, right, it shrinks the world that can access it. And if you throw a layer of AI agents over top of everything, it could do, now if you just type in some human readable words, what does it do? It routes you to some non-human readable IP address somewhere in the world. It's a really interesting thought. I think you're on it, which is AI agents will help this world that really wasn't built for us, make it usable for us.
I'm super curious with like all the recent moves with the administration, David Sachs, bringing crypto into the main, conversation, dinner table conversations. What are your thoughts, number one, on stablecoins? And I think that's, people sort of see it as like the first regulatory hurdle for crypto.
Mm-hmm.
And then second, I think you were referring to this a lot as like, we're in 2000, and in many ways, we look at 2000 now and we're like, man, you could have made a ton of money. But at the same time, there were so many companies that failed in 2000.
No doubt.
And at the same time, people are also seeing the rug pulling scams. And I mean, people losing their entire net worth.
Yeah.
I knew somebody who lost over $40 million on like a crypto scam.
Yeah.
And so how do you maybe advise people on how to navigate essentially a wild west of little to no regulation but with potential boundless opportunities?
Totally. It's such an important question. And I love the way you framed it. It's twofold, right? There's regulation, which should exist. Contrary to what most people think about the crypto space, people often think that crypto people just want this chaotic, wild west of a world forever and always. That's actually not true. Like, you take the temperature of the crypto space, and they just want to know how they can build what they want to build and do it legally. I mean, you have, just in the last week, these lawsuits that the government was sort of like funding and warring against companies like Coinbase, Robinhood. There are a couple others that I'm blanking, but like literally just in the last 3 or 4 days, they withdrew those lawsuits. Because Coinbase is just saying, the reason Coinbase went into court with them was like, just tell us what to do. We came to you. We just wanted to know how to do this safely. We want to help you make sure we're not making heavy-handed regulation that limits innovation. Because also, like Chris said, if we limit it too tightly here, it's going to happen somewhere else. So the crypto world we want clarity, right? We don't want necessarily a Wild West. So the other thing I'll say is, I think it's important to acknowledge the reality of risk and what does that mean when it comes to crypto. And also to put it in context, any new frontier has immense risk. And think about the pioneers who went west in the 1800s. I mean, that risk was life and death. We're improving, as we should, but the risks are, when we put it in context, you think about any space where we can explore what's possible and work to build what's possible, there's going to be risk involved. And it's inevitable. I mean, we still get spam emails, right? Like, sometimes we just get numb to these things because they just exist, right? There are hacks that happen all the time. I mean, once a year you see some major credit card company or otherwise, where the entire database of all our information, social security numbers, credit card numbers, all of it gets leaked. And we're like, bummer, man. There's nothing we can do. So there is something we can do. We can keep working towards it, but it is a reality. We just keep working on it. Like, any new, again, I was also just prior to getting up here, we were talking about when the car was invented, there was a point in time where you had to have legally somebody that ran ahead of the car and flagged everyone down to warn them that a car was coming. Like, we laugh at that now, but innovation is risky. It is. And that comes with reward, and it comes with potential cost, and sometimes real cost. And we just have to keep pushing. Mark Andreessen, who is one of the founders of A16Z and one of the smartest guys, I listen to everything that he's on. I think he's brilliant. And he wrote this piece the other year called The Techno-Optimist Manifesto. And my favorite line of the entire piece was, he said, a techno-optimist holds the belief that every next problem is solvable. So you innovate, you create, you push the frontier, you go to the edge, problems pop up, let's keep going. You keep working on them.
A basic Bitcoin question that I have a hard time understanding. There's a limited supply, and I know it'll last for 100 years or something, and this halving that happens as the blockchain is processed, they're mining Bitcoin, solving the equation for the exchange of Bitcoins. So put yourself in the future when they're all used up and there is no, how do the blockchains get solved if the miners aren't rewarded with new Bitcoin?
Yeah, it's a great question. And the short answer is we're going to have to figure that out.
Okay.
So that the Bitcoin reward schedule, it asymptotically approaches 0 new Bitcoin issued until the year, I think, 2150,
Yeah.
something like that. So we're going to have to figure that out. Here's another analog. The internet, who pays for the internet, and like who does that? And the reality is it's the community. Believe it or not, the community comes together and funds out of the goodness of our heart and in all our best interests, because now we've built an entire economy. Who maintains the roads that
So
are...
it could be solved with no reward, basically as a utility or something.
Exactly. That's how I think about it.
Okay, very
Yeah.
good. That helps.
And then again, Bitcoin versus everything else.
Right.
Everything else they're innovating and trying to design these systems such that, yeah, maybe they take the same approach, maybe they take different approaches. To date, they've taken different approaches, which is there's an issuance schedule such that we reward people continuing to operate. So there are a bunch of experiments out there. I'm pretty optimistic that we're going to figure out a way.
And help us with blockchain as it relates to other things besides currency, like inventory tracking and tracing and taxes. And
Yeah.
How do we think about blockchain as utility
Totally.
rather than currency?
Totally. So the blockchain technology at its core is a distributed ledger. So if you think about the way the world works today, let's take banks, for example. The reason it takes time to settle a wire and costs money is because there are all these processes, because bank A, I send money to you. My bank says, okay, Devin sent X dollars and marks it down on my side. And then your bank says, I think I just received this, let me mark it down on my side. And then you have to reconcile 2 independent ledgers. That's how the world works today. Crypto, blockchain technology, basically what that does is so instead of a billion different ledgers of a variety of things that everyone maintains and tries to check, there's one ledger that everyone shares and has a copy of. That was the core, and the core innovation in crypto enabled that to happen and enabled it to happen trustlessly. So you didn't have to trust and believe, because that was always the problem is, well, so if someone just owns the network or can control the network, you can then take control of the whole thing and change all the numbers and I own all the money. And the innovation was blind, it was essentially blind verification that enabled you to, it was like a computation problem. How can you verify that something's true without controlling or owning the network? And that's what that enables. So to your question, what does it mean for all these other things? It means that anything that's tracked can go on a blockchain, and maybe should. There are lots of things that should go on a blockchain. You hear there's a big burgeoning space in crypto that we call RWAs, real world assets. That's like this idea. We have a bunch of mortgages and like it's chaotic, it's crazy. But if we just made it simpler, more efficient, put it in one place, it can work better.
So all mortgages basically could be blockchain in one ledger.
Yeah, so you can put anything, a blockchain's a record. So you can put anything on a blockchain because you can record anything.
But it's fascinating to me how these crypto thefts happen, and why don't we just go in and reverse the ledger when somebody steals $80 billion worth of crypto?
It's a great question. So
Because
just
if
like,
somebody steals all the mortgages in Manhattan, somebody might want that back.
so here, a couple, it's a great point.
I don't know.
No, it's a great question. So a couple points here. Just last week, believe it or not, the largest hack in crypto history occurred. An exchange called Bybit was hacked for $1.5 billion of Ethereum. Here's the thing. The blockchain was not hacked. It was all the humans were hacked, not the technology. So you didn't ask this question directly, but I'll address it and then kind of pivot, which is people worry about the security of these blockchains. And again, the reality is there's a Lindy effect. It's anti-fragile. As these things, there's the biggest honeypot in the world. If you can hack Bitcoin, it's a $2 trillion asset, $1.9 trillion. If you can hack that, that's the biggest honeypot in the world. Think about how our software companies today try to keep safe. What do? They issue bounties, bug bounties. Hey, find a problem and we'll pay you. That's essentially what crypto is on a global scale. Anyone, anywhere, and you don't even have to ask them. They can just take it. So every day that someone can't hack the blockchain means it's even more robust than it was prior. So you didn't ask that question directly, but I think it's important to address that point. And then in terms of but you do ask a really interesting point. So something went wrong, $1.5 billion got stolen from this good actor. Why don't we take the blockchain backwards? It happened once in the past on the same blockchain, Ethereum. The reason it doesn't happen anymore is because core to the blockchain functioning and us ascribing value to a blockchain. Why do we ascribe value to anything? It's because we believe and trust that it has value, and that if I bring it to somebody else, they'll believe and trust that it also has value. So at its core, I flashed a question up there. It's its whole own rabbit hole, but it's what really piqued my interest, which is like, I actually started to learn what money is. Money is a shared story that humans make. Why do we think that piece of paper is worth anything? It's because we believe it is. And I know that you believe that it's also worth money. The same thing applies to crypto, to blockchains. So if you threaten that trust, which is I know that it's going to keep working, whether I get hacked or whether I don't get hacked, it's going to keep trucking along and nothing can ever stop it. A government can try to shut it down, it won't get shut down. That's so core. It stands on its own, it's robust, it's independent, it's open, it's free, and it just works.
But we know the address because it's in the ledger of the blockchain where that money is.
Correct.
And that's what the dark web, I mean, that's what the Bitcoin or crypto people are saying is, hey, crypto's more secure than cash for dark web transactions because we know where the nuclear key secrets got bought to and
Exactly.
who cached them.
So it's another great point, which is there was a time when the narrative and the worries that, oh, it's that crime money. It's used on the Silk Road. It's buying contraband and drugs and all this stuff. And the answer is like, so is cash. So is gold bars. And to your point, it's better because you can see where it goes. Now, of course, you can't know per se who owns that address, but there's an entire, like, it's a security question, and there's this spectrum, right? And on one end is sovereignty and security. Like if you own gold bars and someone comes and beats you up and takes your gold bars, you don't own your gold bars anymore. But that's part of why gold is so interesting, right? Meanwhile, your dollars, on the other hand, I mean, when Russia invaded Ukraine, we cut them off from the SWIFT system. Like, so that's there's this spectrum here. There's control and there's freedom, and there's a spectrum in the middle. Take your pick. There are problems with each, right? And frankly, I think both should coexist. There's this other worry, or some people used to, I think it's less prevalent these days, but it's that, oh, the dollar has to fail for Bitcoin to succeed. And that's actually not true, in my opinion. So both can, and I think should coexist. More options, what's the role of the government? It's like more options better for the consumer. More options better for the consumer.
You brought up about money in crypto and blockchain. What about tokens in crypto as it relates to a desire for protecting our data, or protecting medical, or protecting voting, or protecting all these other things, which I think are the applications you're talking about? Why do you think more of it hasn't been developed to date, given its security across the transaction?
Why does better technology not get adopted is the question you're asking. And it's like, it's sometimes the most frustrating.
It's super fast and available today.
Totally.
Like, I mean,
It's possible.
You look at it and go, we can't protect our data because it gets hacked at JP Morgan and this, and you go, yeah, we could. If we used this,
Well, exactly.
It would.
So Chris Dixon, the author of this book, really interesting guy, but he has this essay that went viral around Silicon Valley 10 years ago, and it was titled, "The Next New Thing Starts Out Looking Like a Toy." Mm-hmm. It's just like, it's humans that struggle with change in the changing world, right? So we invent things, we push things, sometimes they're right, sometimes they're wrong, and it's difficult to gain understanding. Because it is complicated. I didn't get into how blockchains work or anything, and frankly, I'm still learning. So I couldn't sit down and explain every factor. But could one of you explain to me how the internet works? We use it every day. Sometimes it just works. So you need this complex world of people that specialize and focus on all these different things that come together and move us forward. So it's a great question, and the answer is well, we should pitch them and say this is why it's better, and it's an invitation. It's like, this is better. What do you think? Can I help you? I think if we do this, It'll be better for everybody. And that's how, in my opinion, that's how innovation should happen, is not through coercion, but through invitation. It's like, let's go here. What do you think? Or do you have a better idea? And then it takes some amount of fight, and especially initially, but some people care about the fight.
Well, back to this gentleman's question about David Sachs being the crypto AI czar and the cabinet, like that's an indication of moving forward into these technologies inside our government, which is a huge step forward. Not knowing it's going to happen, but that position never existed before.
Exactly.
Totally. And to piggyback on that point, there was a website. It was called standwithcrypto.com that I monitored it for sure through the election, and it basically they highlighted every congressional race that they thought the industry came together and created this public service basically. Everyone that mattered for the space of crypto, and they were like, our mission is bipartisan. We believe in this technology. So here are the people that are for this technology and against it. And they funded their pro-crypto candidates. And what happened, it's like 80% of the elections that they backed, the pro-crypto candidate won. So Bill Clinton is famous for being internet friendly, right? Like again, Mark Andreessen talked all the time, like he became close with Gore and Clinton because they loved the technology. They saw the vision for how it could help the world, and if we made America the home for the internet, what an amazing world it would be, and it was, right? And technology is a tool. It can be used for good and for bad, and like, it is leverage, and tools are good. I think we should use tools in America, and like that, hopefully it's a bipartisan issue. But we've never seen a more pro-crypto government in our history. And that gives me a lot of hope.
What do you invest in your fund? And are you a maximalist, Bitcoin maximalist?
No, not a Bitcoin maxi. So what he's referring to, like there are these people out there. They're called Bitcoin maximalists, and they think there should only be Bitcoin and nothing else. That's like saying, I don't know, there should only be like Apple and nothing else. Yeah, exactly. So I think of it like the internet. So today there's infrastructure and then there's applications, and I think the dynamics change over time. Where today I invest in majority infrastructure, so that's Bitcoin, Solana is another one I mentioned. It's sort of that base layer, and then I hold like 15 or to 20 other assets that are more applications that are built on top of these things. Over time, I think it changes. So no, I'm not a maxi, and again, back to why I think crypto is so interesting is because you can be nimble, you can be dynamic and see where it's going. There's a term for like that second part that I was mentioning. Today, we call those applications liquid venture. It's a cool name, right? It's like venture style investing. You have venture type returns that's fully liquid. So I invest all over infrastructure, and then within the applications, call it DeFi, decentralized finance, DePIN, some AI, things like that. So categories within applications.
So I think the biggest question that I have so far is, even if you're trading Bitcoin or Ethereum or Solana or Trump coin or hop to a coin or pick whatever you want, it's still based in USD, right? You're still trading, the way you make money is line go up and you retrieve USD. Right? Is there a point where that flips, where you don't need to get USD, where you just have what you had? And if the line is going up because it's based in USD, like when does that currency pair break?
So first, I would say yes, you can trade in USD. You can also trade anything else for anything else. So what's really fun about this space is, like I said, it's open. So markets, there's a market for, if a market exists for something, you can make it exists for, like, so for example, if there's I bet you there's a market for hawk to a coin for Trump coin. Like you can. So the answer to your question is like, you could today already denominate everything in whatever crypto you like. Just like you could denominate your wealth in US dollars, in British pounds, and euro, and in gold, in silver, in $20 million ski chalets. Like you could denominate your wealth in whatever you want. So I would say the same thing applies here. Lots of people do. One way I even think about the value of the portfolio that I invest, in addition to US dollars, is like, how many Bitcoin do I own? So I will denominate the thing in Bitcoin also. So I would just say you can think about it however you want. I think what's compelling to me, the reason I think about it in terms of Bitcoin is because I think it's a really powerful store of value. There's a part that I cut out of this, which is really, because it was sort of macro related, but if you look at every major asset class that's out there over the last 10 or 15 years, and you look at the rate of both inflation, which we track and we know, call it 3% today. It was like, I mean, it's a bit debate. Pick a number, what it was in 2021. But we pay attention to inflation, but what we don't often pay attention to, which is just as important, is the monetary debasement rate. So we think about outperforming inflation, but rarely do we think about outperforming all the costs to our wealth, which is both CPI and monetary debasement, which, wait for it, has been 8% per year over the last 10 or 15 years. So I think our hurdle rate should actually be 11, pick a number, 10 to 12%, not 3 or 2. So I say this because that's one of the reasons I think about it in Bitcoin. So when you look at every major asset class and its performance over the last, call it 15 years, the only two categories that outperformed that 11% hurdle rate, not the S&P 500, because it basically matched that, was the NASDAQ and cryptocurrency as a sector. And the reason is because there's a secular tech trend behind it. When you create value, you outpace. Because basically what that says is the rate at which we issued more dollars basically explained away 100% or 150%, pick your asset class, of its performance. And if you outperformed it, it means you generated some other value. And I know we're at 25, so.
Yeah, we're out of time for questions, but do you maybe want to talk about the book?
Yeah, so I brought a gift, and I got 30 of them. I don't know, hopefully, certainly all the mentors can get one, and if we have any left over, maybe the students. So please grab one, and if you don't have one, just let me know. Bring your name and address to me, and I'll send one to you. And lastly, treat me as a resource. I want to be, like I said, your partner, even beyond this. So I'll make sure my email gets out to all you, and feel free anytime to shoot me a note, and let's dive in. I love this stuff, so I love to talk about it with anyone, anywhere, anytime. So thank you for your time, and thanks for having me today.